and thanks for joining us today. I'm super excited you could be here because today we're talking about really how to succeed in the game of mortgages. So look, more than likely you own a home or want to own a home. And there's a lot of things you should know when it comes to mortgage lending to be able to get the best deal, to be able to find the best property, to be able to get the best outcome of owning a home and possibly getting in it the right way and getting out the right way. And a lot of it comes down to financing. So this is what we're going to be diving into right now. With us is Brian Decker. Now, Brian's a serial entrepreneur who began his mortgage career back in 2004 after earning a business finance degree from Biola University. Now, by 2011, he was among the top 10 loan officers in the nation, and later led loan officer teams at two publicly traded firms. In 2019, he founded Modern Learning, his own mortgage bank. Now, Brian's dedication to ethical lending earned him recognition as one of the top 10 influential mortgage professionals in the U.S. He's also co-founded SOAR Energy, an AI-driven energy efficiency company with Tarek, Moussa, and Shelby, Elias as well. In the cryptocurrency space, Brian has educated over 50,000 learners, helping many significantly grow their wealth. His crypto account skyrocketed from 500,000 to 7 million in just 18 months. So just a little bit about that. Okay. And as an investor, he owns a diverse portfolio, including apartments, AirBnB, and a partnership with Ryan Pineda, as well as Zapotal Discovery Beach Club. Now, today, Brian aims to inspire others to build generational wealth through his podcast, through his masterclasses, and speaking engagements, embodying the entrepreneurial spirit. Brian, thanks for joining us today.
Hey, thanks for having me on, brother. I really appreciate it.
Well, you have such diverse knowledge in so many areas that it's hard to know where to start. So we start with lending, but then we might jump into another. And I'm probably going to have you back on the show because I know you're an expert in crypto amongst so many other areas. So congratulations, man, to all your success.
Yeah, man. I appreciate that. I'm sure just like all of us, we kind of have that inner no stop in us. And so after 22 years in, as an entrepreneur, we always kind of find these little side tangents and you focus on them and they end up turning into something else. But, finance and mortgage and real estate has really kind of been the backbone, over the last 20 years. And I feel like just in the space, there's a lot of people that do it and there's a lot of people that have done it. But I think a lot of the anytime you get advice from somebody, people have a tendency, if they're in the space, the advice is self-fulfilling, where it's like, oh, okay, do this because I make money on it. And so really today, I just really want to kind of provide people that unbiased opinion, so that they can actually kind of really start educating themselves to make better informed decisions and give them some tips they probably definitely haven't heard before.
Well, I want to touch on both sides because there's part about getting the best mortgage and there's part about what you've done to build this and build the team that you built. So maybe if you don't mind, I'd like to start there. How do you do this? How do you go from, because you and I both know, there's a lot of mortgage brokers in the country, right? So how do you go from jumping in and so quickly becoming one of the top in the country?
Yeah, I think here's what in many spaces, we kind of all know this is, I think people first have to decide, is this a job or is this a career? And so in the mortgage lending space, when I got back into it in 2004, the market was really, really hot at the time. And so a lot of people had moved from like selling cars or debt consolidation, and they were just kind of moving on to whatever hot topic or what hot, kind of the economy delivered to them. So they ended up just kind of always just going after refinances or just doing the bare minimum to make as much money as possible. And then when interest rates would go up, they would exit out of the industry and go sell something else and wait for mortgage rates to drop and kind of go back in. And so with my background, I wanted to become a CPA. So I graduated, went and sat for 2 parts of my CPA test. And so then I just decided, I didn't really want to do that. It was going to take too long, truthfully, to make a lot of money in that space in public accounting. And so what I ended up really doing is because I had such a deep understanding of corporate structures and the way income flowed through on tax returns. And so what I really just decided was I'm going to make this a career. I'm not going to just, even though real estate and mortgage is cyclical, I'm going to really kind of take a different approach. And so what I did is at a time is I knew that I wanted to build a brand. And this was back in 2007. So I started doing a lot of YouTube, started really educating, and kind of was the first mortgage guy that actually built a brand, bought the domain, themortgageguy.com. I had billboards everywhere. And I kind of really created a realtor education on how to teach real estate agents to really grow their business and how to go after, investors and how to educate investors. And so I took a different approach where it was really a B2B approach. And that B2B approach, we've all had that coach or that mentor in our life that taught us something. And we just have this feeling of reciprocity to them that like we want to repay that favor. And so I really spent a lot of time really educating a lot of realtors, and then why I was building a consumer brand. And then what ended up happening was in 2008, when pretty much the mortgage industry collapsed the world and 90% of loan officers exited, I just doubled down and grabbed market share. And then what happened is in 2010, 11, when the market started to come back and rates had dropped, all these guys were kind of coming back in to jump in. And I had built such a moat around my business that they came back and were like just going after refinances. And I had built the annuity of a recognizable brand and all these marketing service agreements with all these large real estate companies. And I stayed and did it when everybody else wanted to quit. And so when they came back, I really built a really big business through it.
So it sounds like, and brilliant, by the way, every part of what you just said. I mean, we could spend hours just decoding that alone. But one of the biggest things is the strategic partnerships of real estate agents potentially being able to refer business from on the mortgage side. What have you found is important there with building those kind of strategic alliances?
Yeah, so where I really think that most loan officers, and I've coached a couple thousand of them over the year, and what I teach them is when it comes down to building a brand, and that brand can transform both being in front of real estate agents and being in front of the consumer, but when kind of talking to the B2B side is nobody cares about your mortgage rates as a real estate agent. Like, it's so boring. Like back in the day, or even now, I still see people like posting their rate sheets and sending it to real estate agents, or like, oh, we give great service. Okay, that's not how you build a relationship with the B2B component. Everybody, all they're trying to basically go to do and saying, does a real estate agent end up making any more money if you give a client 1/8% lower interest rate or not? No, they don't. That's just a byproduct of having lower margins. What actually a real estate agent wants is they want you to help grow their top line. They want them to help grow their top line number. So how do you do that? Teaching them about a bunch of random mortgage products, it's going to go right over their head. And they're like, dude, why do I care about all these mortgage products? Just give me the basics. You're going to do the loan. Why do I need to know every single guideline? So what I really took a different approach is I actually taught them how to become better business owners. So I taught them how to actually build a brand on social media, how to actually run ads, how to actually analyze a real estate market. So I was kind of one of the first people that came up and really noticed that there was really a bifurcation that was happening in real estate markets. And what I mean by that is most people think all real estate markets all go up and all go down at the same time. And what I started to notice is there was really kind of 4 key metrics that really affected a real estate market. Number 1 was population growth in that market. Number 2 was job growth, the creation of new jobs so people could afford more expensive house prices. Number 3 was the amount of inventory, but specifically new construction inventory. Because I never know, Todd, I retire, I never know when you're going to actually go ahead and sell your house. So when resale inventory comes onto the market, it's just a guess. People have no clue when inventory really is going to spike other than when interest rates get really low. But what I did notice was, hey, markets that have a dramatic amount of new home construction, that was going to be forced inventory into that market. Well, simple law of supply and demand, if you have a bunch of builders building in an area that are bringing supply onto the market, and we don't have population growth and job growth to match it, it's going to give us a suppression in that price of that real estate market. So, and then the 4th component is I like to look at something called what I call shadow inventory. What that basically means is the number of homes in a market that are either Airbnbs or second homes. Because you know as well as I do, if I own a second home and I hit some hard times, I'm definitely not selling my primary home. I'm definitely not selling my investment property that's covering the mortgage. But my second home, guess what? That thing's the first thing to go. So I taught a lot of these real estate agents on how to properly analyze a market, and then gave them the confidence to do that, and then taught them how to actually build a brand. And then when they are actually growing their business, I taught them some very simple marketing strategies that I used. And what I would do is once a month, I would go into this office and I would teach 100 real estate agents how to grow their business by default. And what ended up happening is by teaching them these facts, they started to grow their top line business. And by the law of reciprocity, they started being like, we're giving me all those deals. They're like, well, if he's really smart at this stuff, loans must be a no problem for him. And so because I took a completely separate approach, what ended up happening is I built this group of real estate agents that just kind of saw me as their coach that helped them grow their business. And guess what? If I'm growing all of their businesses, I'm growing my business indirectly. And through that, my business just ended up exploding.
Wow. So many good nuggets there, ways people do not think about. Identifying the strategic partnership, providing really unique value to them. And then that by default kind of carries down to you through reciprocity, where they're like, man, if this guy's going to help me here for no money, imagine what he's going to be able to do here to help us out. Do you still use that same strategy today to be able to grow?
Yeah, I do. And really what we've done now is to grow is I've got out of the origination side about 3 years ago, meaning I'm not doing the loans anymore because obviously I own a mortgage bank. And so what I did is we basically, for lack of a better term, kind of franchised our model. So what I would do is I'd spent so much time, working at Loan Depot as their top loan officer, and then over at Guaranteed Rate as one of theirs. So I had a lot of connections kind of in the mortgage space. And so what I ended up doing was I strategically would look at markets that I knew really were kind of prime for the picking of really bringing a brand into that market, that it was a really, kind of divested versus a market share, meaning there was like 50 loan officers all having 2% market share. And so what I would do is I'd reach out to a loan officer that I knew, and I said, hey, you know what? Let me help you grow your business. I'm going to help you just put in my blueprint into your business under my flag. I'm going to teach you how to do it. And you just replicate what I did in my market. Because I went from like a 2% market share to like a 61% market share in our county. So it was just, it wasn't a massive county. It was only 400,000 or 500,000 people, but like my company was just doing more than every other loan, And so I taught them that strategy after I really became an expert. So I spent about 10 years really becoming an expert. And I think that's a lot of mistakes that people make is they try to teach before they became an expert in something. And so I really kind of cemented myself as that expert. And then I went out there and I said, hey, you know what? Nashville, Tennessee is really ripe to be disrupted. Hey, let me find the top loan officer in there. Let me bring him under my wing. Let me use all my systems, all my process, everything that I have done, plug and play for him, and then let him go grab market share. And then what do you know? They end up grabbing a bunch of market share. And we went and did it in another market. And so that's kind of the way I've really kind of done it now. And then it's always kind of looking at, and really reinvesting because, at the end of the day, I kind of learned early on that if I can do something perfection, I'm still limited on time. It's the one resource I just can't make more of, right? So I said, if I can teach people to do it 80% as good as me, that's great. Because then I have 10 people doing it 80% as good as me. The unit count and the revenue on that is astronomically more than me doing it 100% as good over time. And so I think as an entrepreneur, I kind of had to we all struggle with the letting go and the delegating and, kind of that. And so you just kind of built a process around it. And, here we are today.
How do you do that? And I'm glad you went down this road because so many entrepreneurs struggle with this. They cannot stop working in the business and never get to a point where working on the business. They can't let go. They're trying to get to 100% and you're like, go with 80 and run with it. So how do you find the right team members that are a good fit and then kind of foster the culture and make sure they're a good cultural fit to take what you've done and then expand it?
Yeah, that's a great question. And so I made a lot of mistakes early on, where I hired somebody that was a friend or I hired somebody because I liked them. Well, what I really learned is there's kind of 4 types of people in this world. There's people like myself, which we're an entrepreneur. We want to be the head honcho. We want it done our way. Then there's the second type of person, which I call them the number 2. They don't want the risk of being the entrepreneur, but they have the skill set and they are willing to just mimic everything and do all the things that you don't want to do. And it's about staying in your superpower. So I use something called the Culture Index. And the Culture Index has 19 archetypes for the type of people that are in this world. So for an example, you have something like an architect, which is a high level of entrepreneurship, but he has an equal level of detail orientedness. And so what I would do is I made mistakes early on just hiring people because I liked them. And then what I really found when I found the Culture Index is I basically have everybody take the Culture Index test. It's very different from a DISC test. And it actually puts them into categories like an architect or an engineer or, a rainmaker. And it's actually used at all the Fortune 100 companies. They won't even hire a COO or CEO. It was developed by this guy I was introduced to. And he's the one that like Microsoft calls when they need a new COO. Very, very successful guy, billionaire based out of Utah. And so I started implementing this because I was trusting my instincts. And what I found was I found a guy like me. So I liked him. He worked for me for 2 years and then he went off on his own because he wanted my job. Or I hired somebody because I liked him and he didn't have a work ethic. He was a smoozer. He was a good talker, but he didn't have the work ethic. And so what I ended up learning is I say, okay, I got my number ones, I got my number twos, then I got a number three who they may not be the smartest person, but they will work so hard. And if you give them a system and a process and an environment that caters to what they really want, and what you need to evaluate with an employee is we as entrepreneurs make the mistake that we think everybody wants to make a bunch of money and they're willing to sacrifice their time for it. That is not how 80% of America works. And that's not how you want your employees to want to. You want to find employees that want to grind that 9 to 5, treat your business like it's their own business, and they feel like they're a part of your family. And so what I ended up starting to do is once I broke down the archetype, or I'll go back, the fourth kind is just the ones that are just freeloaders. They just go from job to job to job. They're going to tell you whatever you want to hear, and then they're all fluff, no go, right? And so I would basically break people down first off the culture index test. And once I got their cultural index, I would find out what role was best for them. And then really at the end of the day, I would evaluate their social media. So I had a girl in my office and she would go all over those social media. And you'd be surprised. Like if somebody's photos are nothing but them at nightclubs, popping bottles and being crazy till 3 a.m. on a Thursday, they ain't going to work for me, or if there's somebody in personally that I notice that, every picture is with them and pretty girls and they're married, that isn't their wife, you're not going to be a cultural fit for my office. And so what I would first go ahead and do is I kind of gave an analysis of would they be a cultural fit? And then when I would interview them, I would ask them what motivated them. Like, are you motivated for a massive bank account? Are you motivated for taking a nice vacation with your family and spending quality time with your kids? Are you motivated for getting your wife to stop working to be at home with your kids? So I'd find what their motivation was. And then once I knew who they were as a person off their social media, or at least how they presented to the world, I knew where they were as a cultural index, and then I knew what motivated them, I could actually make a really good decision to do that. And what I would do is once I found that, depending on the position, if I was hiring, whether it was a loan officer or a processor or an admin, I just had a rule that they would shadow my best person in that position for 3 months. So they would literally sit and when I was doing this, I would hire a loan officer. They would sit in my office for 6 months, hearing me on the phone, seeing everything I do. And I just one-on-one trained them. And it was time staking. But at the end of it, I had 4 or 5 mini me's that I could just, when I hired, put under them to do that, and, it was just, and for the culture thing, it's just little things like putting fridges by every single one of my employees. So they had a fridge that they could stock and they didn't have to worry about doing X, Y, and Z, or making big birthday celebrations. Or what I would do is every morning when I get into the office, I would always be the first one there. But then around 8:30, I would just go into 2 or 3 of my employees' office and I would just talk to them. And just personally, and just take an interest in them and know their kids' names and their wife's names. And then they would ask me financial questions like, hey, Brian, I really want to get ahead. What should I do? And I'd say, okay, here, let's set up, I'm going to tell you how to set up a Roth IRA. Let's put this money aside, this and that. And they kind of took that as like I cared about them personally. And then you just kind of create that culture from that.
There's so much brilliance into everything that you say. I mean, there's so many valuable lessons that this is one of these that if you're watching this, you should go back and replay this, because I think the second or third time you hear it, you'll get even more value and understand how powerful all these things are. Brian, how's technology changed this? I mean, you've been doing this for 20 years, right? And I bet when you were in the beginning, you were the only guy on YouTube that does it. Now, if you look, everybody's a guru on TikTok and Instagram and YouTube. So how technology on the marketing side and on the selling side, how has this changed how you operate?
Yeah, so I've been very, very blessed that my brother is a tech savant, and I don't throw that around like he really truly is. He's one of the top machine learning and AI developers in the world. And so we were very different as kids growing up. My grandfather was, into building supercomputers back in the 70s. So, my brother was from a very young age taught by him on how to code and do all this kind of stuff. And so because my brother was in AI and machine learning, I would always reach out to him. And I think a lot of times what most people, don't realize is you want to kind of, what I call it is establish my super team. So what I did was there's a brilliant book, and it's Who Not How is the name of the book, right? Many people have read it. And what you got to realize is, I think as an entrepreneur, we end up feeling like we have to be an expert in everything. And that's just not, all we have to do is assemble a super team that is an expert in all the key metrics of my business. So for me, I knew the key metrics in my business that I was looking at. It was, number one was obviously marketing. Number two was making sure that everybody got paid on time, paid quickly, things got done in that. I had somebody that was a systems expert, that we could try to be as efficient as humanly possible to drive down the cost of originating a loan, so we could be a good price leader. Then somebody that is really good at like culture, creating that culture that people, it's a fun environment, people want to work with you and be able to do that. And then the last component of that I really knew I needed to kind of put around me was I needed to have somebody that was very, very good from a high level on like accounting and tax and wealth preservation. Because if you don't do that as a company owner, 50% of what you're making, especially in Cali, is going away back to the government. And so I kind of established my super team on that. And my brother was my tech super team. And so I would just have a regular call with my brother, and he would tell me the latest things. And what happens is technology usually begins to disrupt industries in a sequence. So for an example, the first industries that technology disrupts are in the tech industry itself, where it comes into play. Then after that, it usually goes into the businesses with the biggest pockets. So you typically see it in like the insurance space or the medical space. And then from there, it kind of works its way down. And usually the last two that it really kind of penetrates is the real estate and finance space, because there's a lot of oversight and regulation. And then the last one is the home services space, like construction, right? And so I knew that if my brother being on a tech level, if I could learn about technology at the same time he was learning about it, I would be 2 to 3 years ahead of when it would actually make its way into my industry. And so the first thing, what I really started to do, especially with the AI side of it, is what we did is we actually built out with ChatGPT an actual version of me. So what you could do is I've created so much content over the years, plus all loan guidelines and training videos. So we basically taught ChatGPT and created a version of me. And so what that you can actually do is once you've created that model in ChatGPT, you can ask it questions. So a lot of what I was dealing with was fielding questions from whether it's loan officers or just people, because they're too lazy to look it up. So they could basically go in and log in and ask it a question, and it's going to spit out the answer as if I was answering it, right? And so I knew if I could kind of free up some of my time on that, that would be huge. But then the second part of it came up with my concept of what's called a digital twin. I actually did a keynote with Tony Robbins about 9 months ago on this concept. And in our world today, we have the ability where we want to scale, but we don't want to lose that personal touch. And it's been shown that if in a video you say somebody's name, their watch through rate of that video, whether it's a client update video, a lead video, whatever it is astronomically high. It's about 3 to 4 times of a watch rate percentage that you'll get. And so I started working with my brother, and I said, well, hey, Corey, I know I can use like AI for this, but what about video? And so what I ended up finding out is there's multiple different AIs. This was, that I could basically create a digital twin of myself. Whether that's Simulus AI or there's a bunch of them out there now. But what I did is you go in and you go into a room and you get a digital twin made of yourself. It looks like you, it talks like you, all of this. And so what I knew is, hey, if I'm sending update videos to my clients or lead response videos, and I said, hey, Ty, it's Brian, thanks so much for, going ahead and applying here below. I just want to tell you a couple tips, in Temecula, California, blah, 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 blah. And I could pick out keywords based on whatever that lead form was and deliver them content. And what ended up happening is allows you to scale without losing that personal connection. And so I think a lot of times people are scared of AI, or they're scared of machine learning, or they're scared of disruption in technology. And the way you have to look at technology is the same way you look at a labor cost. If somebody's going to come in and be willing to do the job just as good for less, you're going to hire that person. Well, you got to look at your business like that. Is there something that I have somebody doing that I could actually either replace them or allow them to do more work by, putting technology into the place? This is something I need to be able to explore. And so really what really kind of is the game changer on it was the ability to kind of make a digital twin of myself that increased conversion without losing the personalization to scale.
Ryan, wow. There's so many things that are so brilliant to what you're saying. And from somebody that reads a lot of books, I'm sure like you do, it's amazing on how much knowledge you have of so many high level concepts and how you've taken those and broken those down to really actionable things and then taken that to a whole nother level, even using incorporating technology. I don't even know where to go because I could sit here for an hour. But let me ask you this, as we get closer to wrapping up, what is one thing that I should have asked you, but I didn't, that you think can help entrepreneurs that are watching this, that are trying to find their way? They're trying to find the solutions to market. They're trying to find how to use technology. They're trying to figure out how to fix these sales issues they're running into to be able to scale the way that they really want to scale and grow faster.
Yeah, no, it's a great question. So if I'm going to kind of break it down to 3 points. So the first thing is you guys, everybody listening to this call needs to look at the culture index. The culture index, this is something that we did. So I have an AI software company now that is kind of disrupting the home services space. And one of the things we did is we had sold a percentage of the company when we were kind of getting our patents and stuff on it. And what happened was it was 2 companies that were kind of merging at the time. And so I got introduced to the culture index about 9 months ago through this process. And what we ended up finding out is we sent out, it's an application to take their culture index test. It's like $40 a report or something like that. And what I did is I sent it to a bunch of different employees. And what it does is it compares what the employee's maximum happiness and efficiency is. So for an example, I'll just use the case in point, there's something that's called an engineer. And an engineer, basically, they don't want to work in group settings. They're not super entrepreneurial. They have a very, very high level of detail, and they have a very, very high level of patience. Well, I had a loan officer that worked for me that was an engineer. He is in the wrong seat. He probably somewhere along the line, somebody told him he should get into sales. But then what it does is it tells them where they're perfect capable. And then the other bar chart it gives them is what their current job is making them do. And his description was the complete opposite. Basically, he was doing the things that he was not skilled at, and he wasn't doing the things that he was very skilled at. So what it did is we a lot of times hiring people and is one of the most difficult and expensive things we can ever do is the hiring and firing process. So going through and having your employees all take this, and what it does, it tells you what job they're best fit in and what their current job is making them do, and reorganize your business in that way. And we were surprised. People that weren't in sales had the strongest sales characteristics ever, and they were in an admin role. And the people who were in a sales role had the strongest characteristics to be in a processing role. And so we were able to reorganize the business without hiring, without firing, and put people in a position where they're much happier. So that'd be the first thing I would suggest people doing, because no matter how good you think is, and no matter how much you think you have people in the right seat, you don't have people in the right seat in your bus. I guarantee you. The second thing I would tell every single person to do is start to really look at and embrace the world of AI. And so I'll kind of give you an example. So we took the home services space, and there's probably a lot of entrepreneurs that are in somewhat of the home services space. And what I learned about the home services space was it's a reactive industry, right? My roof is messed up and it leaks, I call the roofer. My HVAC goes out and I call the air conditioning guy. I decide I want turf in my backyard, I call the turf guy. So what we did is we basically took recent aerial imagery of a property. And what we did is we were able to run an analysis and determine to flip the home services space from a reactionary environment to a predictive environment. So now I can scan properties in an area, and those properties in the area, I can tell a roofer, hey, these are the 172 homes in your market that have a fair or poor roof condition with a useful life of less than 5 years on that useful life. These are the people you should target because they don't know they need a new roof leak, but within the next 1 or 2 storms, they're going to end up needing a new roof leak. Now you're going to be being able to dominate that market because nobody else is getting that information. And so if you're hearing this and you're in the home services industry, this isn't a pitch for our company, but I want to teach you guys something on how to change your marketing, because the construction industry is so far behind in technology. And this is an application in technology where now you can be in a space and have a homeowner that is actually being able to be like, oh, wow, okay, cool. I didn't even know this. Like, and if you think about construction, it's that one industry where we're reactive on it. There's no proactive, kind of marketing in that space. And so if you're in that industry, that's definitely something from a marketing perspective that you can really go and grab some market share. The number 3 thing I would really strongly suggest doing to really grow your business is to understand when you build content or you build a brand, don't make the mistake of selling your brand online. This is a mistake that most people make, especially in the mortgage and real estate space. So the average homeowner either refinances or wants to buy a new home once every 4.7 years. Now, I don't know about you, but I sure as heck am not looking up mortgage and real estate content if I'm not in the market to buy this. And so I watch too many people in whatever space it is, that they're just making tons of content that's self-promoting their business, and they're wondering why they're not building a brand. Well, what you have to understand is to really build a brand and connect with people on social media, you have to give them a reason to tune into you every day or every week on something that's applicable and can give them a quick win right then. So I tell everybody, use the rule of 80-20. So say you're a real estate agent, right? Well, 80% of your content, let's just say for an example, and you really enjoy home design. Great. 80% of your content should be about interior design trends, decorating your house for the holidays, doing all these tips that people want to tune in every day. And then 20% be about the real estate market to be able to do that. So people are going to want to tune in, and you can stay top of mind no matter that sales cycle. And that's in any industry. If you're an attorney, teach people about all the ways that your rights are when you get arrested. Don't just say, hey, if you get a DUI, call me in your social media. So you have to look at it and you got to think, what value can I give somebody with no reciprocation of me getting an immediate sale? And that's how you build a brand.
Ryan, great stuff. We just scratched the surface here of what we could dive into. Where can everybody go to be able to learn more of everything you had to teach?
Yeah, so you guys, I'm probably, I got a couple 100,000 followers on Instagram. You can just go to @TheBrianDecker. That's Brian with an I and Decker like Black and Decker. That's probably the best place. And if you're in the home services space, you're like, dude, I want to do those leads. We just got our patents on. You can message me there. I know when I go on a podcast, people always ask me that. So yeah, just @TheBrianDecker on Instagram. And that's the best place to be able to see everything on there as well.
Brian, can they go to your website, which is The Brian Decker too?
Yeah, they can go there too. Yep, and find everything else there.
Okay, perfect. All right. Thanks again. I really appreciate you coming on with us today.
Hey, no, thanks for having me, Ty. I appreciate it, brother.
All right, so listen, if you're watching this, I can tell you that I've done closer to 900 episodes, and this is probably one of the top 5 most powerful I've ever done. And the reason I say that is you should go back and listen again and again and again. I mean, there are so many brilliant things he outlined that I think you probably maybe overlooked or didn't exactly hear what he said, because I will go back and listen to this again. There's so many things about hiring, about marketing strategies, about strategic partnerships, about living a life of service and providing value without expecting anything in return, to building sales teams, to scaling sales teams, to be able to put people in the right seat, to be able to how to recognize A players, to how to be able to determine everybody's personality, strengths, and weaknesses, to make sure that they are working where they are happy, to figure out what makes them happy. I mean, I can't even begin to go into how technology is then used, how AI, he literally just taught you how to clone yourself. I should have just started there. He literally just taught you. Nobody in their life has ever taught you how to clone yourself. Brian just taught you how to do that. And we just literally scratched the surface of what we can get into. I mean, I more than likely have Brian on for more interviews, at least 1 or 2 more, because there's so many things to cover. So what do you do now? Go to thebriandecker.com. If you go to his website, which is thebriandecker.com, DECKER, then you can access so many other resources there. And if you scroll to the bottom of his page, you can access his Instagram and his other social channels as well. Now, again, you can go to @TheBrianDecker on Instagram. You can find him direct there. But I really recommend you go to thebriandecker.com as well, because there's so many great things here. You can learn a lot more, and you can access all the social channels. So do that, and then take 20 seconds to just follow him on social. Because if you heard what he just said, what he said is that he talks about all kinds of things outside of the mortgage thing that will help you as an entrepreneur. There's this 80-20 rule of his. He's teaching you all kinds of stuff that's going to benefit you outside of just mortgages. The same same as I told you, this was an interview about mortgages and had nothing to do with mortgages, right? Which has never happened before. So go to thebriandecker.com. Make sure that you check that out and make sure you follow him on the Brian Decker at Instagram. And again, his social media channels are right at the bottom of the page. So thank you so much for tuning in. Make sure you visit thebriandecker.com. Take care. Have a great day.